Does closing a credit card hurt your credit score? When you're trying to keep your spending under control, canceling a credit card might seem like a smart move. But that can impact your credit score in several ways. So first of all, does closing a credit card hurt your credit? Yes, it can. When you close a long-standing account, shortening your credit history may lower your credit score. Reducing your available credit can raise your credit utilization ratio, which can also lower your score. And cutting the revolving credit from your credit mix may reduce your score as well. To make this decision, consider your spending and payment habits. It may be better to close your account if you tend to make purchases you can't pay off, or you make late payments on your account. So then, how much does closing a credit card hurt your credit? A few things determine how many points you may lose on your credit score. How long has your account been open? Closing an old card lowers your average account age, which has a bigger impact than closing a newer account. What's your credit utilization ratio? Canceling a card lowers your available credit, which raises your utilization. The higher the closed credit line, the bigger the impact. And finally, how diverse are your accounts? Having a mix of credit types can boost your score, and that includes loans and credit cards. The more credit cards you have, the less impact you'll feel from closing one. When should you close a credit card? There are a few good reasons to close a credit card. For example, the credit limit is too low to make use of, or the interest rate is too high. The annual fee is too high to make back in rewards, or the reward structure doesn't match your lifestyle and shopping habits. You separated from your partner and it was a joint account. You're often tempted to make purchases you can't afford, or you're not using the card anymore and can't imagine when you would. Now, here's how to close a credit card the right way. First, use your rewards, like points and cash back, while you still have access to them. Next, transfer automatic payments like subscriptions or utility bills to another card. Then, pay off your balance, including any pending transactions or fees that haven't posted yet. Now you can close the account. You might need to call customer service, so have them check for a zero balance at the same time. Then, destroy the card by shredding or cutting it up, which helps protect against identity theft and accidental use. Finally, review your credit report for any errors. You can get it for free from annualcreditreport.com. Your closed account should show that you took the action, not the issuer. If you find any mistakes, file a dispute to correct them. Of course, there are some alternatives to canceling a credit card. You could put the card away for emergency use. You could negotiate a lower interest rate by pointing out your positive payment history. You could switch to a card with no annual fee, so you're not paying just to keep it open. Or if it's a secured card, you could upgrade your secured card to unsecured. These options give you access to credit in the future without losing benefits or damaging your credit score. Here's the bottom line. Choosing to close a credit card is a personal decision. So keep in mind how it might affect your financial life, including your credit score.